Billy Abrams, CEO of ADM Securities, and myself, Alex Suslov, Head of Capital Markets at A&D Mortgage, are here with you for our weekly A&D Digest. Billy,
hello everybody. Hello Alex.
We had a few economic events, including inflation. We see conventional rates at 4.7% today, and non-QM rates at about 6.25% for an average scenario. Last week, we saw inflation numbers not to beat expectations, and inflation is still higher than previous months, but it looks like market is stabilizing a little bit. However, in non-QM space, we see investors are awaiting for some moves from Feds, for some moves from the government, where oil will go, and are staying a little scary, which widens the spreads on the market.
Right.
Where do you think inflation and oil will drive us in the coming week?
Well, I don't necessarily see signs that inflation is going to ease off, but at the same time, the oil market is flirting with going back under $100 a barrel, which a month ago would have sounded horrible, and in today's world, that's good news. It's come from 130. So the markets are somewhat stabilized. Maybe they've discounted the worst. The treasuries have, oddly enough, the volatility in the markets, number one, didn't come on days when there was economic news, and number two, they've come in both directions. 5-year on Friday the 25th, the 5-year opened rather quiet, and it was up 20 beeps before the market closed. 2 days later, it traded at 260 for the first time in more than 3 years, and by the time it closed, it was back in the 240s. And since then, it's actually traded under 240. So we've got a 20 plus basis point rally, first time since previous month. So things are looking better. I think we're going to look at some two-sided trading as opposed to just higher yields, which I think the 5-year went up 110 basis points in the month of March alone. So get a correction going, maybe we can get 25, 30 beeps in the other direction, and it really wouldn't change much.
I understand. What about 2 years? Is 2 years more volatile than 5 years?
The 2-year moved about the same as the 5-year. The 2-year went from, I think, around 125 in the first day of March to about 233 or 34 the third week of March. It's not bounced as much as the 5-year, but I think it will. And I'll go back to something I think we've talked about in the past. Now, the 2-year is trading well over 200 basis points or around 180 basis points above Fed funds. The average spread is 20 basis points. There's plenty of room for the 2-year to rally, even with the Fed continuing to raise rates. The 2-year rallies, the rest of the curve should rally with it. So Alex, if the market does stabilize and we quit getting spikes up in yield, we'll probably see spreads tighten a little bit. Maybe mortgages come back to treasuries. Non-QM space will get intriguing again, as it's been and remains, and is not as sensitive to interest rates, perhaps. And so in non-QM world, what do you see happening there?
Yeah, absolutely right. So if spreads come down, we might see an improved rates. We still see a lot of refinances though, since property values have increased and a lot of people are cashing out, no matter how high the rate is. So we still see the flow of refis. For non-QM, with increasing rates and people having higher payments, we're coming up with improved pricing for our interest-only loans, so people can get a better rate on their interest-only loan and pay only interest, and then refinance in 5 years or so, when in 5 or 10 years when the rates stabilize. As I mentioned last week, we're coming up with improved jumbo program, which will be released in a week or two, and we'll be happy to talk about it with you next week here. As for other news at A&D Mortgage, we've launched last week our ADM broker portal. Our IT team is always available for any support, and they're hosting daily Q&A sessions to support people on that.
Right. The IT team seems to always stay ahead of the curve, and it's always exciting to see the new things that are rolled out. Alex, what do we have to look forward to in the week ahead with regards to webinars?
Next week, we'll be talking about asset utilization program, how our borrowers can benefit using their assets, which include stocks, bonds, holdings in mutual funds, and even cryptocurrency.
Correct. So it's all exciting news. It makes it, we open a bigger universe for non-QM lenders and borrowers, and it's all good news for us.
Yeah, absolutely. Look forward to growing with our broker partners in the industry. Thank you, everyone. It was Bill and Alex with A&D Digest, and we look forward to talking to you next week. Stay tuned.
Thank you, Alex. Thank you, everyone else.
Thanks, Billy.